Hey, this is Sasha. Thanks for joining me in today's video. What I want to do is give you some insight to some Iron Condor basics. Like, what is it and how do you make money with it? And why might you consider trading these Iron Condor strategies? So before we continue and talk more about this, I wanted to let you know that one of the reasons we're discussing this is because we've got the new Options Mastery Iron Condors version 2.0 being released. And if you go ahead and grab it before Valentine's Day, there's $100 off coupon, so make sure you check that out. Now, a lot of the things that I do is really one-on-one coaching, mentoring, and I work with people 3 to 6 months at a time, sometimes for a full year. But if you're a DIY person, that's what this course is all about. You can check it out on the website at tradersfly.com. Link's going to be in the description below. All right, so let's kick things off, and we'll go ahead and talk a little bit about Iron Condors. What are they? How do they work? And how do you make money? Well, let's first take a look at our basic paper. Now, the paper here that'll tell you is the price of the stock relative to the profit. And the way that things work here is, let's say I buy a stock at $110 per share. Now, if I buy the stock and it goes up, I make money. If it goes down, I lose money, right? If I buy at 110 and I get out at 100, well, I'm losing money. Well, if it goes up, well, now it's at 120, I make money. So this is how this works. Now, what's interesting about this is that, man, the only way you can make money is if the stock goes up or down, or you get a dividend. But in general, it's just, you got to have some price movement. With an Iron Condor, the power behind it is that you're able to make money even if the stock goes sideways. Because a lot of times stocks, they don't just go up, they don't just go down. They actually can move sideways. Many of the times they're more sideways than up or down, okay? And what happens is you create a construction like this. This is known as a risk profile picture. And then with time, okay, what happens is that this line, which is the today line, gets closer and closer to expiration. And you're collecting a thing called theta, okay? Now, you don't have to understand what in the world this whole weird picture is doing for you. All you got to understand is that time decay, time continues to erode with time in the same way that you go ahead and, let's say, somebody sells you internet service, okay, and you pay, let's just say $80 a month or $30 a month or whatever you pay. Let's say you're paying $80 a month for internet service, and every month you pay internet service. Another month, $80, $80, $80. And what happens is they are selling you internet service and you are buying it. So in this case, we are selling an Iron Condor and somebody else is buying different legs, okay? And with time, that expires. So after 30 days, you have to get more internet. So after 30 days, somebody else might want to buy some other contracts. So what you're doing is you're selling premium over and over again. And the basics behind an Iron Condor is really, if we take a look at it, it's more of a straddle and strangle kind of concept. So what I'm doing is I'm selling option premium. Let's go take a look at Roku here, 32 days out. And let's say I sell the 45 on the put side. Well, if I sell this option instead of buying an option, right? If I go in, and if you were a buyer of a put, you'd be looking for the stock to go down. But as a seller, it's actually the other way. So now I'm a seller and I want the stock to go up, right? So it flip-flops between a buy, okay, I want it to go down, but a sell, I'm taking the other side of the trade. Now I want it to go up. So the way that it works is that I'm making theta or time decay. But if I was a buyer, okay, I'd lose $60 a day. So as a seller, here's the powerful thing behind it. Boom, I'm making 60 bucks a day from just time decay. There's the white line, that's today. The green line, that's at expiration. And with time, as this moves forward, I get to make, you know, premium decay, and I get to make some money. So now if it stands sideways, doesn't do anything, goes up, pulls back even slightly, I still make that amount. And that's the power behind Iron Condors, and this is the way they kind of work. Now, right here, I've got the put contracts. I'm selling one. Okay, and what's happening is, what I could do is go out and also sell another one at another spot. So let's say I'm going to go to the 65 over here. I'm going to sell the call contract now, okay? So the call contract works in the same way, but opposite. Okay, so in this case, if you were a buyer of a call, you'd want the stock to go up. Here, I'm actually a seller of a call. So now I want the stock to go down. So now I've got a put and a call. And if I combine them together in the same way, I've got myself a bada bing, one of these things known as a, okay, if you do it together, you could go in, and there's a few different strategies here. It's known as a strangle, okay? So you've got a strangle right there where it's 65, 62 spread. There's a strangle. It's basically the same thing. It's just I've spread out the parts. Now, the problem with this is I've got unlimited risk all over the place. If it goes down or it goes up, I've got a lot of unlimited risk. So there's a lot of problems here. Now, the theta decay is amazing. Look at that, 128 on theta, but I got unlimited risk. So how do I negate that? How do I combat that? Well, what I do is instead of just doing the 45s and selling it, I could also buy, let's say, the 43s. Okay. And what that would do is go ahead, buy 10 of them. It would trim off my one side over here. So notice how that reduced the risk. And the way that works is to show you, okay, I've got a 65, or sorry, I've got a 45 and then I buy the 43. So if I buy something at 126 and I sell it at 163, right, I'm making that difference here. And now together, I make the 36 bucks times 10, so $360. It still has a decay. It's just not as nice anymore. It's $8.26. So with time, it still decays, but it's not as beautiful as just the single. However, there's not as much capital at risk and not as much trouble. So this is known as a vertical spread, vertical put spread. So we're selling a vertical put spread. And then what I can do is do the same thing here. And let's say we go in and sell a vertical over here on the call side. I'm just going to do the 60s this time and the 65. I'll just do it together as a vertical. And then I will do 10 of those. And now I've got, well, we'll go here to the 40s, so it's the same. And now I've got myself two verticals on both ends, and I've got myself an Iron Condor. So here's the vertical from the call side. Here's the vertical from the put side. And there is a beautiful Iron Condor. And now the 33 theta I make per day as that decays goes there. And I don't have unlimited risk. So the way that it works now is that the short duration, the short options, which are the negative ones, will decay faster than the other ones. And with time, what's going to happen is this white line, which is today, will get closer to the green line because of that time decay value that happens. So every day that this moves, let's say we move the date forward and I click it, you can see that white line gets closer to the green line. So it continues to go, and then you go ahead and profit. Now, most of the time the stock's not going to stand still, but let's say even if it pulls back, well, you can take it off for a $580 profit. You don't have to stay in the whole thing. Or it goes up a little, you could take it off for $390 profit. But the point being is that now, rather than a stock having to go up and for you to make money, now what's the beauty behind this? What's the benefit? Stock can stand still, you make some money. It can go up slowly, you make money. It can pull back slowly, you make money. Okay? With a stock, if you just own the shares, you don't get that luxury or opportunity. However, in an option with an Iron Condor, that's amazing. And you get to make money in different ways, in different conditions, as long as it holds steady. The problem, of course, is if it explodes to the upside or explodes to the downside, that can be an issue. But even if it goes to the downside, at least you have a little more of a defined risk than you do with a stock. So anyway, I hope this helps and gives you an eye-opening of how they kind of work and behave, the Iron Condors, that is. I know it's not a full-fledged Iron Condor course here that we went in detail. I just wanted to give you an overview. Is really, it allows that stock to stand still and you can still profit, mostly because of that theta or time decay. And what that time decay does is it erodes, and every month or week or every day, you get to collect some of that premium. And what you're trying to do is build more value into that Iron Condor. In other words, you're selling one and then it decays and then you take it off for a profit, right? Sell high, then buy low, and now you get to take it off. In other words, you buy low, sell high, but in an Iron Condor, you're selling first here in this case, and then you're buying it back for a cheaper value or price. So anyways, that's the basics behind an Iron Condor. That's a general overview. Again, there's much more into it and much more detail into Iron Condors, but this is just a quick little YouTube video. And I highly encourage you to check out the Iron Condor course if you're really serious about it. We've got the promotion and sale going on, so definitely check it out And if you want to learn it, if you're a DIY person, that's a good starting point for Iron Condors. Now, if you like to work one-on-one and you want to learn even faster, the fastest way is really what I do with people when I work with them for 3 months, 6 months at a time. And you can book a free 20-minute coaching session. And that's where I work with people for 3 months, 6 months, and much longer, where we do trades together and we meet up pretty much weekly. So take a look at that. But that's for people that are, hey, I don't have time for a lot of other things. I just want a quick path, fastest path. Ask questions every week and you get it done. It's one-on-one. It's like working with a piano teacher, working with, a trade person. Like if you're trying to work on your house, it's someone there holding your hand side by side. So anyways, I'd say that's the smartest approach for a lot of people. But if you kind of are a DIY person, then you could check out kind of a course with the Iron Condors course, and it's still going to give you a ton of knowledge and information. This course alone is, I think, 21, 22 hours now. And there's more videos that are getting added all the time. So check out all these videos that we've got: finding good Iron Condor trades, adjusting Iron Condors, managing balanced Iron Condors, low probability, high probability, unbalanced Iron Condors for earnings, protections, gamma Iron Condors, directionals, legging in, so much stuff and more to come. So anyways, hope you join me. Check it out. Links in the description below. Tons of knowledge in there. If you have questions, do reach out, and I hope to see you either in the course or maybe I'll get a chance to speak with you and work with you one-on-one sometime in the future. Thanks again, and I'll see you next time.